Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. So let's talk about the Nasdaq. So the Nasdaq, we talked about potentially being a double top dropping down. Now, ideally, we wanted it to break and retest here and pop to the upside. Now, the market has had other ideas, which is a little bit annoying. Now, we were looking at these little areas for it to potentially stop, and it hasn't. It has continuously dropped, okay, and dropped and dropped and dropped. Now, we did have this level here. Now, what I could do is I could move this level down to there. And then I have a bounce here, a bounce here, and a bounce here. Now, from the chat group, someone asked, is this an inverse head and shoulders? So I'm going to get you guys to sort of have a look at this first, and you tell me whether it is or it isn't. We've had that move down, pop back up, come back down, fail to break up, come back down, pop back up, come back down. Now, with the inverse head and shoulders, we would be looking for this to happen. And then for it to break the neckline here. So this section here is the neckline. So is that an inverse head and shoulders? And to draw out a proper head and shoulders, I'll actually do it with a line rather than. So anyone that doesn't know, that's what a head and shoulders looks like. So is this a head and shoulders? Come on, everyone, you're being very quiet. Get off the fence, yes or no? Okay, so most people have said no. But my thing, this looks like a head and shoulders, doesn't it? It looks like a head and shoulders here. You have a phase one, phase two, phase one, phase two. It's failed to make a new phase two. So then the pattern changes. So it's an inverted head and shoulders. It may have two heads here. It may have two heads instead of one. But if it bounces here, that is exactly an inverse head and shoulders, isn't it? Okay, so it is an inverse head and shoulders. Yes, it's not perfect, but if this comes up to this blue level, then yes, it is 100%. Now, so there's also another pattern playing out there. What's the other pattern playing? Because there's a couple of patterns. There's three different patterns playing out here. We have that pattern playing out as well, don't we? phase one, phase two, phase one, phase two. And we're looking for this to bounce off this floor and then back up. And in the last pattern that could play out here as well, change it from red. Then up, isn't it? The triple bottom. So this is the thing with the likes of this. We have three different scenarios. But with scenario 1 and 2, we're expecting for it to bounce at this level. Okay, so we've moved our level. We're expecting it to bounce here. So remember, trading is about probability. Okay, trading is about probability. So everyone give me an answer on this. So what's the probability of the market moving or bouncing to the upside at that point? Out of 100, would you say it's 80%, 70, 60, 50, 40, 20? Okay, so most answers have said to me between 50 and 70. Okay, perfect. What's the probability of the market bouncing at this point? Okay, so on this one, I get 90, 90, 90, 80, much higher, 51, 70. So from just you guys alone, which of the two structures do we think would play out better? The inverse head and shoulders or the triple bottom? Okay, so the general consensus is a triple bottom. So then the question then comes back to here. So what was posted before is on the smaller time frame, we have a setup for a long position here. Okay, so we have a long position setting up here on the smaller time frame. Is this a good place to buy? Now we're just assuming this bar is finished. Okay, so just assume this bar is finished. So the entry goes above that bar. So just assume it's finished. Our stop loss would go above this floor here. So see this wick? So it would go above that wick. So go above that wick. So we're about there somewhere. See my dotted line? It's just above that wick. Our take profit. Our take profit would, for me, would be just inside that level. So you risk 3.2 to make 7.3. So just over a 2-to-1. So is that a good trade to take? Yes or no?
Okay. So the question you have to ask yourself is, if you think it has a lower probability of bouncing here than here, you do not take this trade. If you expect it to come down here and bounce, you don't take this trade. Now, if you don't take this trade, I can guarantee this is what's going to happen. And you'll be like, damn you, Henry, look, I didn't take this trade. That's just the way trading goes. But if you expect it to bounce here instead of bouncing here, you do not take that trade. And that's the idea of it. It's about your trade selection. So it's about your trade selection. Now, someone has said, Henry, can you work out? Can you go through your what about the look of the Irish? What? I'll show you one now in a second. I'll show you the natural gas trade we took, and you can call it lucky or you can call it unlucky, depending on yourself. So the idea is we're looking at that bar. Just imagine that bar is finished. So we're just assuming that this bar is finished. Now, most people will get the stop loss and put the stop loss right there. Now, the problem with putting that stop loss there is that the next 4-hour bar, okay, so we're assuming the 4-hour bar, the next 4-hour bar could do this. It could come along, trigger us in, go up, come back down, and stop us out. Okay, because that bar is quite small. But again, if we have our stop loss here, it's only 1.5, so we're only looking for 6%. Where they did 3-to-1. So it means your risk to reward is good, but the chance of being triggered out is quite slow. Now we have this floor. So we found this floor. So we found it bounced there once, it bounced here twice, and now it's bouncing a third time. So we're expecting it to bounce up that floor. So what I have to do is I have to go and investigate off this floor, where is the lowest point on this floor? And as if I go across here, I can see that these wicks here, these 2 wicks went below, didn't they? 2 wicks there went below. Then what I can see, as I come across, then it went back up. These 2 bars went back up. Then all of a sudden, look, the wick came down here. So what I have to do is I have to keep my stop loss a little bit below that wick, because it could come down on double bottom right there. You'd be surprised how many times it finds a floor at that particular point. So my stop loss has to go a little bit below that. Now, what I like to do is add the spread and 1 or 2 pips. Now, could you put both on? Absolutely, of course you can put both on. You can put even both here on if you wanted. You could put this trade on here. Now, if you're putting both trades on, you could put this one on here. I would recommend you still only risk 1%, but you put 0.5% on this one. And then you put 0.5% on this one here. And then you put 0.5% on it. So you're still only risking your 1%. And then you have the better risk reward in this one. And then you have the normal safe trade in this one. Now, the problem is that this one you may get triggered out quite quickly. Now, what I assume you guys meant is, can we place both of them? As in, place this trade and this one. And the answer is absolutely yes, of course you can. But the problem is, if you get triggered in and triggered out of this one, you're coming down here, and if this one wins, you're only getting back the money you lost here. So theoretically, you're actually not any better, are you? So we have to make sure the trades we're taking are on point. And again, would we put our stop loss here, or would we put our stop loss below that floor? And for me, you have to put it below that floor. So we've had 1, 2, 3, 4, 5 bounces there. So for me, it has to go below the floor, even though there is a level there. could even bring that down a fraction. Okay, still a triple bottom. So that's the idea. That's what we're trying to do. We're trying to make sure when we're taking these trades, we'll give ourselves the best advantage. Now, I'm gonna go to the natural gas, and I'm gonna show you the idea behind this. Now, if we take this trade here, there is a probability of you getting triggered in, triggered out quite quickly. That's the default. That's the problem when we're placing some of these trades in the smaller time frames. So give you an understanding of why I trade like I trade, because if we go to natural gas, this is a trade that we looked at short. We had divergence here on the likes of stochastic. We had our high test bar here. Didn't jump into this live. Resisted the temptation to go down to the smaller time frames. And made sure I got triggered in when it made a lower low. Well, I'm gonna move this out of the way for a second. I'm gonna zoom in as far as I can on this. So this is the bar that we entered on. This one here. So look, there's the bottom of the bar. If you look, this bar actually went a fraction lower than it. It went a fraction lower. Now, probably only a pip or two. And I was never triggered into this trade. So look, there's the low, right on this line. And look, this one goes below the line. So that meant my entry was there. So my entry always goes a couple of pips below. And look how close I was. So someone said the luck of the Irish. Well, you can call it lucky, or you can call it good trading. At the entry, we never got triggered in, which means then we never got stopped out. Even though this is a low test bar, and there's a 70% chance it went lower. And look, it did. It went lower. Absolutely. It went lower. And that's the problem with potentially jumping in live sometimes, is that you're in the market. There's no room for error. In this particular one, there was loads of room for error. The market didn't agree with us, which means that it actually cost us nothing to place that trade. Go over here to eToro. Look at the pending orders. There it is there, look. That's that order right there. Anyone who is in on the Discord channel and these trades, on Discord. There we are. Okay, so there's a trade right there. Starting natural gas. There's the entry, stop loss, amount of money, rate, X5, take profit. Then here, literally a day later, trade is closed. Look what happens. It broke the high here. The trade is closed. So it's little things like that, But there, cancel the order. The order is cancelled. That trade cost us nothing. Did anyone else take that trade? And did anyone get triggered in? Okay, so most people took it and they didn't get triggered in. Okay, cool. So some people on the group also put up that they were shorting the UK100. Let's have a quick look at the UK100. So again, we talked about this one, didn't we? We talked about this one and potentially taking it short versus potentially taking it long. Okay, someone said there's divergence on the stochastic. So let's have a quick look. And we have the high from there to there going down, with the high from there to there going down. Okay, so is that divergence? Is that divergence? Come on, guys. Yes or no? Is that divergence? Stop rubbernecking. Get involved. So no, this is not divergence. Divergence is disagreement. Remember, divergence is disagreement. So see this here going up and this going down, that will be divergence. This here, from there to there, and this from there to there is convergence. It's confirming that that's a lower low. Now, what most people will do is they will look at this here. And then they will do this. Now, is that divergence? Okay, so can anyone tell me the rules around divergence? Because I've given you the basics of one going in one direction, the other going in the opposite direction, because this is not divergence. It's divergence in the sense that they're going in opposite directions, yes. But what's the only other thing we need when we're talking about divergence? And convergence, for that matter. We need highs and lows, don't we? Perfect, James. We need highs. So we need to be able to confirm, use other points of reference. So is this a high here? Is this a high here? No, it's not a high. So we wouldn't use that either. So we're looking back here. Is this a high? Is that a high there? The answer again is no. So when we're talking about divergence, we need to be clear on what we're looking for. We need to be clear that for divergence, we need clear cyclicity. So we need three bars getting lower. We have two there. We have two there. They're flat. That is the minimum cycle. That's the minimum phase one and phase two. Look, 3 bars going up, 3 bars going down. So then that tells me the last high that we have is there. That's the last high that we have. Which means then that's the last comparison point right here. Clear that. We have to make sure we're looking at the right places. Now, where can we go to look for those highs? Now, what we've spotted here is not wrong. So where can we go to spot these highs? Where do I know? I understand, but bear with me. So where can we go to look at these highs? The smaller time frame. So look at these red bars, and they pull backs on the smaller time frames. Let's have a look at the smaller time frame. Drop down to the 4 hour. So now look, we can see previous highs and lows, can't we? So before we go anywhere now, we need to have a quick look at this. I'm going to draw in those phase ones and phase twos. Now see this here? This is not classed as a phase two because we've one selling bar, inside bar, absolutely not. So for me, this goes from here to there. Then I have an inside bar, 1, 2, 3, 4, 5 bars getting lower. I now have a phase two here. That's my low. That and that one are pretty similar. Okay, so I want to go to there. And there's my phase one. And there's my phase two. Would anyone disagree with that? Would anyone disagree with that? So then what we have to do so then what we have to do is we can move this from the high there to the high here. Same with this one. There. There. Do we have divergence? No. Okay, so remember, we have to investigate these. It was well spotted. It was well spotted. Well done. But the idea is you have to keep an eye on these. You have to make sure you're looking at the right things. Now, what we could potentially say is that now, because we are jumping the last, this here, this is the last high. This is called hidden divergence. So when we're jumping the last cycle, it's called hidden divergence because most people don't look at it. So there is a little bit of divergence here, but hidden divergence. And then again, you have to look at, am I happy to jump in on hidden divergence, which is a little bit harder to see. And most people who trade divergence don't massively trade hidden divergence. Okay, so that's the trade-off you have there. So from the previous high, there's no divergence. But now we have hidden divergence there. The question you also have here now is, that 1, 2, 3, 4? Is that a quadruple bottom now? Is that a long? Should we be looking at that as a buy signal? The entry would be on this inside bar. See the inside bar here? Stop loss is below this low here. Take profit inside that high. Is that trade valid? 0.6%, 1.2, 2 to 1. We look at the daily chart before we look at any of those. What phase is the daily in? Phase 1 or phase 2? So is it daily in phase 1 or is it the daily in phase 2, guys? So the daily is in phase 2. And if the daily is in phase 2, you should never be longing the smaller time frame. Okay, you should never be longing the smaller time frame if the overall trend is up and the higher time frames in a phase 2. Okay. You should only be longing the smaller time frame if the bigger time frames in an upward trend than a phase 1. When the smaller time frame is in a phase 2, that's when you buy. Never this scenario. This is the opposite. Never when this is in a phase 2. A 1 bar pullback, maybe. 1 bar pullback, yes. 1 bar pullback, yes. Never when it's in a phase 2. We've 1, 2, 3 bars getting lower. This is a phase 2 at this point. Also, you have a double top. I would actually expect a little more of a pullback in this. You also have Nasdaq after having a big sell-off, S&P sell-off, Dow sell-off. So the UK 100 is not something I would be looking to buy at this particular moment. I don't get why the stochastic is different on eToro's chart versus TradingView. It's not. It's the very same. So there's the chart, the one that you posted. There's that high. There's the low. There's the high and there's low, and that's divergence. Absolutely, that's divergence. Indicator, stochastic. From there to there, you have divergence. From that point to that point. But we're going to this point. So there's the high. We're going to this point. So we'll go back to the drawing here. There's the point you're at. So look here. You haven't gone to the high. You should have went from there to there. Because this high, we follow this up, is there. It was a good spot, but it wasn't. It's not correct. You just move. You're going to the wrong high. So a little bit of human error, but Eduardo, good shout. But again, it highlights how to use it correctly, which is probably far more important than actually taking a trade and winning money or losing money. It's how to spot it correctly. That's far more important than going, oh, that's a good trade and making money off it, or that's a good trade and losing it. It's getting to see it correctly, getting to understand why it's wrong, the subtle changes in it. And that's the thing with trading, is that there's subtle changes. They're open to interpretation. You might look at the hidden divergence and go, absolutely, yes, hidden divergence, jump in on it, that's a winning trade. Or you might look at it and go, nope, absolutely not. And that's why trading reversals is so hard, because we never know how big this phase 2 is going to be. Question is, the last time I hit this level, look at the phase 2 we had, the whole way down to there. So are we expecting this phase 2 the whole way to go down to there? How many people caught this reversal here and then took it the whole way down? I would say 0 people. Okay, someone said down to the 772 level. Seems to be a pretty decent level, yes. But even if you took that short, I'm pretty sure you'd be out of the market before it hit this level. or because GBP is bullish, this might happen. That could happen as well, couldn't it? So we have a triple bottom here on a smaller time frame. We have a low test on the daily. This could be the beginning of the next upward movement. Would I take it? No, because I don't have a huge horizontal level. I have a horizontal on the 4 hour, but it's a 4 hour level. It's not a huge level. I'm a little bit overextended. And the daily is in phase 2. So that's why I'm not taking this one. But if I come back to this purple line here, then yes, I'd be taking it. Would I consider the UK100 as a double top? Yes, absolutely. Yes, 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 yes. Would I have traded it? Not on this bar, nope. And not on this bar because it's too big. So the only way I would have traded it is potentially going down to the 4 hour. But would I class that as a double top? 100%. Let me have a quick look on the 4 hour. Had a spot at that there. Yes, we had a buying bar, then we had an inside bar. But my stop loss would still have gone above that up here. Still would have had to have gone above that. So if I move that out of the way for a second, put in a short on this. There's where we enter. Stop loss would be above that high. And I probably leave a little bit extra on this one, just in the off chance I'm being a little bit too aggressive. So at the minute, 1%. And this went down to that floor there, which is 1.3, 1.2. I would have got a 1-to-1. Now, would I have held on to it for much longer? I don't know. Probably would have started hard closing the position, trailing my stop loss, doing a whole heap of things at that particular point. But was that a valid trade there? Yes. And that's how I would have traded it. Put this one back up here. Stop loss is below that. And there's the potential long there. Anyone that took this long would be in that position right now. The people have said there's been a big movement on the Nasdaq so far. Okay, drop down. Daily. Okay, so we're getting a little bit of upward momentum today, which is good. Let's see how this affects the market today. How many times have we seen a little bit of a jump on the market open, and then all of a sudden, then by the time it closes, it's down around its ankles again. Okay, so this is exactly what we're looking for. But even with that movement today, would I be looking to take this trade long? No. Is the trade valid? Yes, it is. We do have a horizontal level. We do have places to enter. And if that bar finished like this, it would be a good bullish momentum. If it finished like that on the daily chart, it would be a decent enough trade there on that. Be nothing wrong with that trade. 3%, 6.2 before we hit this level here. Even if it finishes like that for the day. But anyone that takes this on the 4 hour, up down to the 4 hour, put that back in where it was. Well done. It's going well for you at the moment. The last trade I took was Twitter. Let's have a quick look. Twitter had a little jump to the upside because of good old Elon. Elon then looks like he's not actually going to take a seat on the board. So the market has dropped back down a little bit. The pre-market shows it's slightly up again. But Twitter, anyone who jumped in on Twitter like I did, what's your consensus on this? Are you looking to hold this long term? Are you looking to hold this short term? Or are you looking for this to hit the record high and you're looking to jump out? What's the thinking behind this? What's the thinking for this, guys? Did no one take it, or are people just being shy? So Carol says, I think both sides want to bring the price down. Why do you say that, Carol? For Elon to buy more Twitter to dilute. I can understand that sentiment. But again, nobody really wants the price to drop off a cliff. Then that means then they're losing customer base, they're losing fans, they're losing everything like that. So they have to manage this. They have to manage this quite well. Obviously, most of the other shareholders don't want price or do want price to take off, but Elon would like the price to come down a little bit so he can actually buy some more at a cheaper rate. Absolutely, that's logic. That's just good business sense. But if there's a couple of changes that comes in the meantime, this could take off. This could take off. This could be the beginning of a little run. It depends. It will be very interesting to find out whether if the earnings here are good or bad. If the earnings here are good, we'll probably see this get very close to this high up here, in my opinion. If the earnings are bad, that'll be 3 quarters in a row that have been negative. When was the last time they had 3 quarters in a row that was negative? Being past 2014. Look, they had 2, then a good one, and then a bad one, and then sort of took off again. But looking at the likes of this, could this turn into the likes of the machine of Facebook? It has the potential. It has the potential. Twitter is one of these things that you either love it or you hate it. I absolutely detest it. It's just not something that I like whatsoever. So it's one of those things that you either like or hate it, and the people who like Twitter love Twitter. Okay, we had a similar jump on the likes of Tesla, and no coincidence that once the stock price jumped on the likes of Twitter, it was after it happened on the likes of Tesla as well. But if we look at today, the pre-market, we're actually up as well. I don't use it either. Am I missing anything? Absolutely not. Stay away from it. So the idea here is, for me, it has to come back down to this level here before we can get any sort of value in it again. But again, earnings are the 22nd, which will be huge. Which will be huge. We've had earnings have all been good. If they can have a good earnings here, with everything that's going on with oil, with everything that's going on with the likes of the price of that, this for me could be an opportunity for the likes of electric vehicles to stamp their authority on this. And with a good earnings here, we will probably break this high, in my opinion. All depending whether the market is still relatively bullish as well. Okay, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening, and I will speak to you all. See you all next Tuesday.